All right, let's just jump right in. We're going to talk about something that honestly underpins almost everything in our modern world. I'm talking about the phone in your hand, the car you drive, the very roads you drive on. We're talking about capital markets, that invisible but incredibly powerful engine of the global economy. I mean, just look at this. Every single day, there's this gigantic, complex system humming along in the background, channeling trillions with a T, trillions of dollars around the planet. It's this constant, massive flow of money that fuels innovation, builds our cities, and really shapes our entire future. But what is this system really doing? For a lot of people, when you say capital markets or the stock market, their mind immediately goes to, well, a kind of high-stakes casino, right? Some exclusive club for the super rich to place bets. It's a really common way to see it. But is it the right one? The truth is actually far more fundamental and, let's be honest, way more interesting. So forget the casino for a minute. Instead, I want you to think of it as the world's most powerful matchmaker. It plays this absolutely critical role in our economy, and we're going to break down exactly how it pulls it off. So at its very core, a capital market is, well, it's just like any other market. Seriously. It's a place where buyers and sellers come together to make a deal. The only real difference is the product. People aren't trading food or cars here. They're trading capital. They're trading money that's looking for a purpose. So who are these buyers and sellers? Well, the market is designed to bring two main groups together. On one side, you've got the people with extra capital. Let's call them the savers. And on the other side, you have the people who need that capital to build something, to create something new, the innovators and the builders. And these aren't just some abstract groups. Savers could be you putting money away to buy a house someday. It could be a big company with extra cash on its balance sheet, or an insurance company managing its funds. And the fund seekers? They're the entrepreneurs trying to get a startup off the ground, big companies that want to expand, or even governments that need to build things like new bridges or schools. Okay, so that brings up a really fascinating question. If the product being sold is money, how do you buy it? I mean, you're not just swapping $1 bill for another, right? So what is actually being traded? And this is the absolute key to understanding everything. You aren't buying money itself. What you're buying is a promise of future money. It's a claim on cash you hope to get down the road. And this promise is formalized into things that can be bought and sold. This promise has an official name, of course. It's called a financial asset, or sometimes a security. It's basically a legal title that gives whoever owns it the right to receive cash in the future. And the two most famous types of these assets are, you guessed it, stocks and bonds. Now, what's the difference between the two? This is so important. When you buy a bond, you're essentially a lender. The company owes you your money back plus interest. It's a debt. But when you buy a stock, you become an owner, a part owner of the actual company. You get a piece of the pie and a share in any future profits. It's ownership versus lending. Okay, so we know who's playing and what they're trading. But where does all this happen? Well, you can think of the capital market as having two distinct aisles, if you will, the primary market and the secondary market. Let's walk through a quick story to see how they both work. So first up is the primary market. Imagine there's a company, we'll call it Agrometal, and it needs cash to build a brand new factory. So it creates a new bond, a brand new promise, and sells it directly to an investor named Pedro. The money goes straight from Pedro's pocket to Agrometal's bank account. Boom. Agrometal has the cash to grow, and Pedro is now its creditor. But what if, a year from now, Pedro suddenly needs his money back? Maybe he has an emergency. This is where the secondary market saves the day. Pedro can sell his bond to another investor. Let's call him Juan. Now, the key thing to notice here is that this trade is happening between two investors, Pedro and Juan. Agrometal, the company, isn't involved at all. The money changes hands, and now Juan is the new creditor. And that little story shows you exactly why the secondary market is so vital. It provides something called liquidity, which is just a fancy way of saying it gives you an exit ramp. It gives investors like Pedro the confidence to make a long-term investment in the first place, because they know they aren't locked in forever. They can sell and get their cash if they need to. So when you put this all together, these markets have what I like to call three essential superpowers. First, they help reduce risk. Second, they're amazing at matching timelines, connecting people who want to save for the short term with projects that need money for the long term. And third, by doing all this at a massive scale, they actually reduce the costs for everybody. Let's look at that risk reduction power. The market basically lets you live by that old saying, don't put all your eggs in one basket. Instead of betting all your savings on one single company, which is super risky, you can easily spread it across many different ones. You can diversify. And even small savers can do this by putting their money into funds that own tiny pieces of hundreds of different companies. So what does this all boil down to? It means capital markets are not a casino. They are the essential channel, the plumbing, that takes all our collective savings from millions of people and directs that money as efficiently as possible toward the best and most promising investment opportunities out there. And that brings us to the real bottom line. This incredible matchmaking service is what fuels progress. It's what allows new ideas to get funding, companies to grow, and massive infrastructure projects to get built. It is, quite simply, a necessary ingredient for economic growth. Seriously, without this engine, our world would look completely different. The companies we rely on, the technology we use every day, a lot of it might never have even existed. So the final question I'll leave you with is this. Now that you can see the engine working, how do you see it shaping your world and your own future?